got nothing to lose. Oh my, gonna shake it off. It ain't no thing, it ain't no thing. Oh my, doing what I want. Gonna do my thing, do my thing. Put it up high and take it low. I'm feeling right from head to toe. Light it up and let it roll. Here I go. Are you ready? Ready to go? Are you ready?
What? We're 5 minutes early. Why? Because we want to get you guys out of here on time. We have a full schedule today. So let's get this party started. So, what's that?
That's your song.
That's my song. All right. So speaking of parties, party here, 3 o'clock, 3 to 5. It's our 1-year anniversary. There's going to be tacos and tequila. So be here 3 o'clock, 5 o'clock, and have some tacos and tequila. Let's celebrate our 1-year anniversary. Our Pathway to Mastery, it's the Buffini program. It is starting next week. It is starting October 2nd. So all that is interested, please reach out to me. You got to get signed up pretty soon, like real soon, because they have the materials that they have to ship to you. So please reach out to me and I'll get you signed up. Next up, we have a CE class listing agreement top to bottom. That is tomorrow, 10 o'clock to 1 o'clock at the Green Valley office with our own Vandana. So if you haven't been to a Vandana CE class, you got to go, well,
10 to 1.
10 to 1. Is that right?
You said 1 to 3.
Oh. No. Today's, all right, whatever. It's 10 to 1. All right. And we have a trunk or treat, October 30th. You know, when Brandon said, we need to do a trunk or treat, I'm like, okay, let's do it.
That's nice.
What's a trunk or treat?
Brandon never said that.
Well, whoever said it. Don't walk on my story. Come on. So I literally had to Google it. What's a trunk or treat? I found out. So I'm going to be here, and I'm going to decorate my vehicle. And you know, if the weather's nice, I'll bring the little car, and I have 2 trunks, a front trunk and a back trunk. So I'll decorate them both. You go. All right. Next up, we have Breast Cancer Walk, October 27th. And so everyone who's interested in that, there's the link to that, or reach out. Actually, she has 30 seconds.
Okay, 30 seconds. I don't have flyers for all of our fundraiser events. First of all, there's the pink boxes at all 3 offices. Just want to remind you, it's a 50-50 raffle, and that'll be done later on in the event. But the second event, please mark your calendars, where we are still working on our little flyer because somebody's so good at it. Hadn't done yet. October the 10th, we're having a wine and cheese fundraiser at the Green Valley office from 3 to 7. We'll have, of course, wine and cheese. We're going to have a billiards tournament. Oh. Brandon doesn't even know about that. We're going to pick 2 people, or you know what? We're going to have you sign up with Tim Lowe, and you can get that information from me if you don't have it. We're going to pick 2 people from all 3 offices and 2 from citywide, and have a tournament. And so then we'll pick the best out of those 4 groups, and then we'll see who wins. And we'll have a grand prize for that. And a silent auction. So just mark your calendars, you guys. October 10th, Green Valley office, 3 to 7. And I will have a blast and flyers out soon. And then, of course, on the 22nd, here in our office, we are going to do our Baking for Boobies. And you'll see all about that.
She's done. All right, so the one event that didn't make the slideshow is our picnic, and it is on the back of all of your agendas. So the picnic is October 4th, that's Friday, October 4th, from 4 to 8 p.m. It's at the Hills Park. RSVP to Aaliyah at signaturenv.com. Who is going? I'm going. It's a really, really cool event, and it's just, It's just get together, have fun, and have some barbecue or whatever we serve. Chicken, I'm sure there's chicken. It's a family event. Yeah, so, all right. Next up. We'll get started with the meat of our event.
Is in my genetics. Rely on me, you never regret it. Victory's mine, yeah, that's where I'm headed. For this passion and drive, I'm forever indebted. Know to motivate each person here. I'm sure it's my purpose to.
All right. So, who has already checked in on Facebook? Good job. Who still needs to? Sherry. So I'm sure Ellie has, right? All right. So everybody, pull out your phones and take a picture and tag everybody around you. All right. We already went over all the important dates, so we won't go over those again. What we didn't go over is a DigiSign webinar, 10 o'clock to 26th. We didn't go over Coffee with Mark. Typically Fridays have to cancel it because I'm going to the Nevada convention. What do you call it? Nevada State Convention. So I'll be there Thursday and Friday. Business Generation Mastermind here at 9 o'clock on Mondays, and then the mini mastermind at 10 o'clock at Green Valley, and again, Buffini Pathway to Mastery. All right, next up we have George from Citywide. Where is George?
Come on, George. You committed.
Okay, perfect. How's everybody going? Wow, this is a full office. I always get nervous when I talk in front of here because you guys are so awesome. But the reason why I'm talking today, first things first, want to say thank you. This has been a great summer for us. So on behalf of Citywide, we want to say thank you for your guys' business. We appreciate it. Hopefully you guys all had a good summer and you guys are gearing up for fourth quarter. Now's the time that we all have to sharpen up our tools, right? And stay on top of all of our leads and follow up on everyone. So we want to make sure that nothing's going to waste. But the main reason why Shelly wanted me to talk today is because of rates. A lot of you heard that the Federal Reserve lowered the interest rates a quarter point. Does everybody know what that means?
Not really.
Does anyone? Just out of curiosity? No? When the Federal Reserve lowers interest rates a quarter point, that doesn't mean the mortgage rate goes down a quarter point. Okay? Where you see the big impact is going to be on credit cards, personal lines of credits, auto loans, things of that nature. Okay? It takes a little bit of time for the mortgage industry to kind of catch up to that. Okay? We had a rate cut, I think it was like Thursday of last week. Today, the market's down and rates are okay. Until then, rates got more expensive for us. So that's something to keep in mind because we have some clients that are coming to us and say, hey, rates got lowered a quarter point. You know, we were told that we should be looking for a lower interest rate. So that's something just to keep in mind. Does anybody have questions about that? No? Okay. So that's pretty much the most of what I had. But mainly, again, I wanted to say thank you guys. We appreciate it. A lot of you guys I've been doing business with for the first time this year. And so that's awesome to me. A lot of you we've been doing business for a very long time. So those of you that are looking for a strong lending partner and you guys haven't give Citywide a shot, we're here for you. That's it. That's all I got.
What?
Oh. Also, we got a taco guy. Okay? So there's going to be a taco guy. There's going to be all sorts of delicious taco stuff. Mark is in charge of the alcohol. He wanted to get wine coolers. Okay, we told him no. We told him tequila and vodka was what we need to do. So that's it.
Yeah.
And cerveza for the people that want it. So yeah.
And wine, good.
There's enough whining going on around here.
Ice.
All right, thank you guys. All right. Next up, we have stuff from Janet.
Way to be.
We have Janet in the house.
Good
morning. Okay, first thing I want to talk about is Thursday, October 3rd. I think it's a Thursday. YPN is having their annual trivia night at Sierra Gold on Jones and 215. And they put together teams. You answer trivia questions with your team. They're stupid little bar games that you play, and the winners get points. And they've been doing this now for 4 years, and I just want you to know that yours truly has won 2 out of the past 4 years with my team, not by myself. And so last year we had a manager's team, and we won, and we're coming back this year to...
We came in second.
No, we did not. We have a medal. It does not say second. I'm wearing my medal.
Oh, no.
We came in.
No, we didn't.
I'm gonna
We got a medal, okay? We have a medal. I'll be wearing it the night of October 3rd. So if you want a good time, a lot of fun, make your...
Call Janet.
No, RSVP with Kylie at GLVR, and you can come watch. And I challenge any of the rest of you to put together a team. They're 5-person teams.
And it's regular trivia. It's not real estate. So you can bring anybody that you want to come. Like, don't feel they have to be in
Bring
real
the
estate
smart
to be able to
people.
do it.
I didn't bring any ringers. I brought regular real estate.
You brought me.
So, okay, that'll be a fun time, October 3rd. Also, the state convention is Thursday and Friday. If you signed up for it, you really don't want to, the first day is really kind of all techie stuff. The second day, Friday, really fabulous guest speakers, including a former Navy SEAL from SEAL Team 6. So you do want to be there on Friday. As of yesterday, there were 15 slots still available for the special presidential The Prez discount code. If you have not RSVP'd and you want to see me, I'll give you the code and you can come
What's that
Thursday,
code get us?
Friday. Huh?
What's the code get us?
You get it for $25.
Okay.
Which basically pays for your Top Golf.
Top Golf is separate, Christy.
No, but the Top Golf by YPN is a good networking event on Thursday night.
There will be,
Along with LAAA.
Yes.
LAA.
along with the leadership alumni, don't forget them. Okay, but the main reason I'm here is to talk to you about PSF. Now, political survival fund. If you paid your dues and you took $50 off, raise your hand. No, don't raise your hand. So, but anyway, NAR gives us, the state of Nevada, a goal every year. You must raise this much money. And this goes to protect and support realtor rights and the property rights of our clients. Now, if you're a major contributor, $1,000 or more, you have a pin. You get a really nice pin. We have a number of major contributors in this room. If I miss you, raise your hand. We have Vanna, we have Sherry, we have Ellie, we have, what's your name? I forgot. No, yeah, Brandon. I'm like, who is that? Myself, Christy, Glenn Weil. So we all have little pins, and I was going to wear mine today, but I forgot. So we are way behind in our goal that we have to raise. And NAR will consider you an investor in PSF if you give me your name, your NERDS number, and $20. I have these cutesy little pins that are the state of Nevada with a realtor R in it. I know everybody has a $20 bill stuck in your wallet somewhere. And I have this whole bag that I need to sell. So please come see me after the meeting. I'll be sitting right there. All I need is $20, your name as it is on your license, and if you know your NERDS number, that would be a great help. So please, we need to raise money. We are way behind. If you want to know where this money goes, I will tell you. First of all, Vanna told you all the things that the legislature did for us this session, so I'm not going to recap that. But for the past 10 years, we have fought back the legislature in coming after your commissions. They want to tax your commissions. They want to tax them when they come into the brokerage before you get them. Now, Brandon's not going to give you 100% commission if he's paying taxes as it passes through the office. Then when you get your commission check, whatever it might be, you have to pay taxes on that too. And that's not your IRS taxes, that's state taxes. We fought that back for 10 years, they're coming after you. I remember a time when there was a crazy bill about every house that has a pool has to have the pool fixed at point of sale. We fought that back. There was also another crazy law that they tried to pass that at point of sale, every home must have an energy audit. So every home inspector in town went out and got certified to be an energy auditor. We fought that back. So where does that money go that you give? First of all, it goes to pay for Carrera, Nevada, our lobbying group, who is absolutely fabulous. But between BORPAC and NeverPAC, we interview every single candidate running for office, and we give money to those who support our cause. And if they don't support realtors, then we don't give them money. So money talks at the legislature. So please give your money. And there are people going, well, I don't like the party that you give it to. Well, last year, 48% went to Democrats and 52% went to Republicans. We are the realtor party, not the Democrats, not the Republicans, the realtor party. So please come see me and buy a pen after the meeting. Thank you.
That was a long 3 minutes. All right, Vandana. Get up front.
I know. I apparently only get like 5 seconds because of Janet. Girl, I see you.
Oh, I need motion.
Oh. Okay. So, before we forget, Mark did mention that he was going to be decorating his front and his back trunk. But you guys on your trunk or treats, we're actually looking for agents who want to be a part of the trunk or treat. This is a client appreciation event. It's a community event. We need you guys to get involved.
And we're doing it here in this
And we're doing it here in this parking lot. We have a limited amount of spaces, so sign up with Aaliyah as soon as possible because we do need to get that out. You will have a flyer to send to your clients, so let us know. All right, next. I get to introduce these amazing people. So for years and years and years, everybody always asks, right? Is it a good time for me to incorporate? I don't know. I'm not an attorney. I made this much money. Is it a good time for me to? I don't know. Have you talked to your CPA? So rather than asking us as brokers, we thought it would be best to bring in the experts. And so I will be introducing Miss Gina Bongiovi with Bongiovi Law Firm. She is a business consigliere. Did I say that right? Yeah. And then, well, I know I said your name right. Right. And then Kelly Tate, who is the CPA. What company are you with? Kelly Tate?
Tate CPA.
Fabulous. All right, you guys. To incorporate or not to incorporate? Ask them the questions.
All right. Good morning, everybody. Thank you for having us.
Good morning. Good morning.
Thank you.
All right. So I'm going to start off with kind of the legal. So there's a couple of different driving reasons from there are definitely two different perspectives on this: a legal perspective and the tax perspective. So I'm going to start off with a legal perspective, which may or may not even be relevant to most of you because you don't necessarily expose yourself to a ton of risk when you are in real estate. So at kind of brass tacks, the whole reason to incorporate is to put some separation between your bucket containing your personal assets and your business assets, to put some separation between those two buckets. So if you're operating as a sole proprietor, so you have your license with the real estate division, you're operating that way, your personal assets, your business assets are in the same bucket. And that means that if any liability were to come to you for whatever you're doing in your business, your personal assets are also at risk. When I would do this presentation about 8 years ago, people are like, why do we care? Our houses are upside down, everything's depressing, everything's terrible, nobody's happy. But now that things are starting to come back, it becomes more relevant. So the reason you create an entity is to create this line of separation between the bucket containing your personal assets and the bucket containing your business assets. And what we call in the legal world, that's your corporate veil. So if you hear the term piercing your corporate veil, that's where if you have liability coming to your business, somebody will try to pierce through that corporate veil protection and get to your personal assets. So under Nevada law, individual officers of a corporation or individual members and managers of an LLC are not personally liable for the debts or obligations of the business, which again is why you would form an entity. So if you are suffering from insomnia, here are the actual NRS 86 controls limited liability companies, and NRS 78 controls corporations. It's very verbose. And so I usually have a conversation I work with business owners of all types, and we also have the conversation, should you or should you not incorporate? If you do decide to incorporate, should you be an LLC or a corporation? And so I kind of default to the LLC because it's a simpler entity type to manage. But it really depends on the type of business you have, what your exit strategy is, how you intend to fund it, things like that. So I usually default to the LLC unless you're trying to be the next Twitter, or I should probably update that reference to something like, I can't use WeWork because I don't really know. Instagram, perfect. If you're dealing with international investors or want to offer different classes of stock, probably none of which apply to you guys. So I would still probably default from a liability protection standpoint to forming an LLC rather than a corporation. And then here's kind of the difference. So they both offer the limited liability protection. The LLC has a little bit more flexibility on the tax treatment, which Kelly will go over, and I can certainly make this available to you later. One of the biggest differentiators between an LLC and a corporation that came about a few years ago is the difference in the state business license fee. So LLC state business license fee is $200 a year, corporation is $500 a year. So sometimes that's enough to just drive people into nuts.
My turn.
Your turn.
All right, the question I get asked the most when people come into my office is should I, if I'm going to become an LLC, then do I need to do something beyond that? And typically the answer depends on how much money they're making at the time or how much money they think they're going to make that year. If what we do for tax purposes, because what Gina's talking about is the liability protection, which I agree everybody should have the liability protection, especially if you're driving people around, looking at houses, things like that. That's what I always think of as the biggest risk for you guys, is having some kind of an accident and next thing you know you get sued. So I tell everybody they should have at least an LLC. Now, you can stay a sole proprietor as an LLC. If you're the only owner of an LLC, which is a typical realtor, that's what's called a single member LLC. And for federal tax purposes, it is essentially ignored. It's a disregarded entity. You would still be a Schedule C sole proprietor on your individual income tax return, okay? The downside to that structure is that you pay income tax on your income, and you also pay self-employment tax on all of your income. Self-employment tax is the payroll taxes that you would normally pay if you were a W-2 person. You pay half of it, your employer would pay half. In your guys' case, you pay all of it. So it's 15.2%. That's just what it is. It does decrease once you get to like 100 and I think it phases this 12.4% phases out somewhere around 128,000. I don't know the exact number because they change it every year for inflation. So, you know, for somebody who comes into my office, I had a girl in yesterday, she's a real estate agent. She came in and she was making 40 grand. She's new in the business, she's not doing much. Probably not worth, I told her to get an LLC, she needed to do that. So she'll probably call Gina. But she's probably not making enough to rationalize the next step, which is how we try to save the payroll tax. So I told her, just stay in a Schedule C for now, come back in December and let me know where you're at. You know, and if all of a sudden you've sold 10 houses and you made a bunch of money, then we might change our strategy. What we typically do for you guys is we move you into an S corporation. You can be an LLC. How many people are in S corporation? Yeah, so a bunch of you already done it. So you can be an LLC, you're still an LLC for all purposes. Secretary of State, I know that you're an S corp, but you just get taxed as an S corp with the IRS. And when you get taxed as an S corp, there's rules that go with that. You have to do an S corp tax return, so there's a cost for that. We have to do what's called reasonable compensation for any owner of more than 2% of an S corp. If if they work for the S Corp, they have to have reasonable comp. And this is where we sort of job the IRS a little bit. If you make $100,000 after expenses, if you were a Schedule C, you would pay 15.2% payroll taxes on $100,000, plus your income tax, whatever that rate is. If we put you in an S Corp, we could split that 100 grand, we could put 50,000 in a wage and say, there's your reasonable compensation, and we could put 50,000 as just a profit distribution. So essentially, we've shielded the profit distribution from the self-employment tax. And so that, instead of paying $15,000 in self-employment tax, it's $7,500 of self-employment tax. So it's a huge, huge benefit. Then you lob on top of that, you know, the employee benefit stuff that we can do, and the savings with the SEP account, these kinds of things that we can do. It ends up being pretty advantageous. The cost of that is you got to do an S Corp tax return, and then what my office does is at the end of the year, most realtors don't have employees, so they don't really want to do payroll. So at the end of the year, we pretend that you had payroll, and we just do a W-2 and 940, 941, DETR, all the tax returns related to a payroll. We create that for a $50,000 payroll. You know, if you made $80,000, we might do it for $40,000. We kind of do it for about half because that tends to not get audited. And that's one of the huge benefits of S Corps is they rarely get audited.
So I have a question on that. So if you're doing, if at the end of the year, you're sort of just saying, well, we're going to pretend you did payroll, right? That, and this might be a question for you, that corporate veil could potentially have been unsealed by that, right? Because now your expenses, like, don't, because I mean, as an LLC, like I have my shit's all separate, right? Right. But if I put everything into one account, I mean.
So during the year, what you're going to do is, so say you make 100 grand. During the year, you're taking distributions. You have a business bank account. Now, I recommend everybody have a business bank account. Do not mix personal and business, right? And that's part of your bucket
That's the
thing.
corporate veil thing.
Yeah, so have a business bank account. During the year, you just take your normal transfers out of your bank account to your personal, and from your business account to your personal account. So maybe by the end of the year, it's 100 grand.
That's what okay.
We're just going to reclass 50,000 of that as a wage. That's all we're going to do. What's that?
You could also call it shareholder distribution.
Well, distribution is the other 50,000. That's the other 50. So we want a wage and we want a profit distribution, and that's how we're going to get you out of a whole bunch of self-employment tax.
Why wouldn't you just get a payroll company to give you a payroll every month?
Because a lot of people, most people I have, don't know how much they're going to make. So you don't want to do a payroll for, say you're doing $5 grand a month, so you end up with 60 grand at the end of the year, and then you only made 80. Now you paid payroll taxes on 60 when you probably could have paid it on 40.
Couldn't you just take half of your monthly payment?
You could.
Month?
I mean, absolutely. You can absolutely do payroll, and I tell people all the time, yeah, you get on payroll if you want. If you want to, because you can decide every week or month or however often you do payroll. You can decide what to pay yourself. A lot of people just don't because they want simplistic. That for them is not as simplistic. But payroll companies are great. They do all of the tax returns on a quarterly basis for everything. You don't have to worry about it. There's just a low cost to it. Is there questions about that? Yeah, that's bad.
Oh, I just did that. So I probably should have said at the beginning, so you kind of have to look, because a lot of people have some confusion around, hey, I want to form an S Corp, or I have an LLC, and there's a lot of kind of abbreviation in the way people refer to it. So you think of it that you sort of exist when you're doing business in two different worlds. One is the legal world and one is the tax world. So if you're a sole proprietor, as Kelly said, you default to being taxed as a disregarded entity, which means the IRS doesn't really acknowledge that your business exists because it doesn't really care. If you're a partnership, you can't help but be taxed as a partnership. If you're a corporation, you have the option of being an S corporation or a C corporation. And anybody who went to business school knows the C corporation has double taxation, which is why it's sort of unfavored. So the entity is taxed on the income that it makes, and then the individual shareholders are taxed on that same income when it comes out as dividends. And the reason the LLC, one of the other reasons the LLC is kind of a more favorable entity is because under certain circumstances you can elect either a disregarded entity or a partnership taxation, or S or C.
It's very flexible.
So if you hear the terms flow through or pass through taxation, that's sort of like your income or losses from your business activities flow through or pass through and show up on your personal tax return. So you're filing an informational return.
None of these three entities pay taxes. All of it flows through to you personally if you're the owner.
And then we'll circle back because I know you'll probably have some additional questions for Kelly, but I wanted to also touch on some of the regulations that really pertain strictly to you as far as when you do form your entity. So Chapter 645 is your what governs you, not only the Nevada revised statutes, but the Nevada Administrative Code. And so basically, if you do form an LLC, the name of the LLC has to match the name, if you're a salesperson, has to match the name on your license. So you can't do a fictitious firm name. The only people who can do fictitious firm names are brokers. There's more additional, this is about if you do have a team. So basically if you're talking about, so I'm going to pick on Vanna here because I know she's got the ball of group. So you can use the term group. First, if it's not taking somebody else's name, if you're not infringing on somebody else's name. If you have more than one licensee in the group, if you're all employed by the same broker, if the name of the team or group, and this is really important, contains the name of at least one of the members. So you can't do like the excellence group or something like that. And then there's, of course, the catch-all. Advertising complies with all of your advertising rules. And I totally feel your pain because lawyers have terrible advertising rules. And then for brokers, if you're creating an entity around that, there are some rules that will apply to you. You may have a home office. This doesn't really apply to you guys, but you may have a home office provided you comply. And let's take questions. I know we're super ahead of schedule, but what can we answer about either the liability side or the tax side? Any remaining questions?
Actually, can you talk a little bit more about home offices? I know that's not really what you're talking about today, but a lot of us have home offices and then just come in here.
Well, there's a difference between having a home office at which you're licensed and having a home office where you just do work. So if you guys are hanging your license here in any of the 3 locations, then that's technically considered your office. If you have a home office, so this is really for those who are getting their real estate license, and the real estate license is registered to a home office. So you have to comply with all of those different things, and I'm sure everybody knows CC&Rs have to be checked. You know, if you do have clients that have businesses that they want to run out of the home they're about to buy, I get this all the time. They say, well, I'm just going to buy this house and I'm going to turn it into an office. So you can't do that. You can't have people who are not related to you operating a business out of a residential property. Any other questions on that?
No, but can you just backtrack a little bit because, you know, I mean, I can't be the only one that's just lost, and I've been talking about this. Just to make it really clear, and I'm sure I'm helping people back there as well. What would you suggest is the best route? Because, you know, for the average realtor, between 50 and 100,000 a year, basically, I think that's a good average. Yeah, there's a lot more and there's a lot less. What would you suggest the best money saving for taxes and legal? Which would you say to do, the LLC?
So I would definitely say an LLC, and then the tax treatment is really Kelly's call.
Yeah, I would say an LLC for sure. Once you get above $50,000, I think it's worth being an S corp.
Now, is it $50,000 in revenue or $50,000 in profit?
Net profit.
Net.
So that's after expenses.
After expenses.
After expenses. If you net out $50,000, maybe $60,000, then the S corp route probably becomes worth it. Anything below that, it's really borderline because of the cost of creating tax returns and all that stuff that you got to do related to the S corp. For audit purposes, I will tell you, Schedule C sole proprietors get audited all the time. They have what's considered to be classified expenses. Those are things that the IRS keys on. It's things that whenever you file those returns, if something's out of whack, disproportionate, it flags in their system. And I do more audits for sole proprietors. Knock on wood, I haven't done an S corp audit in 20 years. It's been that long.
Everybody should knock on wood on that one.
And I would say 80% of my clients are S corps. It's a very popular entity. You know, partnerships are far more flexible for a lot of things, but it just takes the right type of business to want to be a partnership.
And so if I wanted to change my LLC to S mid-year, you know, let's say today, I can do that. It doesn't, how does it vary for your taxes?
Yeah, so there's a form called the 2553, which is the election to become taxed as an S corp with the IRS. So you file that form. We can backdate those forms. So if you have an LLC today that you had January 1st, still existed January 1st of this year, we could backdate the election and say, oh, we want to be an S corp as of January 1st. It's a late election. There's a revenue procedure that we quote on it. We give a reason why you're late. It's usually a really stupid reason. You know, your lawyer forgot to do it. It's pretty common.
Those guys.
We just give them an excuse, and we can backdate an S election. You know, that's why, like I had it yesterday. You know, I said, come back in December and let's see where you're at, because I can still make the election in December for January 1st. As long as she has an LLC in place. You can't do it until you have an LLC in place. You can't do it as a sole proprietor without an LLC.
So you have to, so essentially if you have an LLC, just from the broker's perspective, if you guys are an LLC, like the W-9 needs to be turned in for the LLC so you can get paid that way, right? So then that's the only way that you can change it at the end, by the end of the year. You have to be paid under the LLC.
It doesn't have to be paid. I mean, we could, in essence, say that was an error, an accounting error, and it was paid to the wrong place. I mean, it happens. I mean, it happens in a lot of businesses where people, you know, but we would prefer a 1099 to an LLC EIN, not your social. But we do have ways of backing that out and moving it over.
They have ways of auditing.
So what I've learned all through this process over the last 2 years is basically you get an LLC, then you take that LLC and tax it as an S corp. That's the best way to save money. And then, but once you get the LLC, you're now self-employed, and it takes 2 years. So if you need to buy a house or something like that, you have to wait 2 years for that LLC to mature after you've created it.
If you were a realtor without an LLC for the 2 years prior to that, you were still self-employed because you got a 1099. 1099 is what creates the self-employed piece of that.
But you have to show proof with
But
the
you've got to
LLC.
show proof, and then they probably, typically mortgage guys, I know there's one here, they always ask me for a letter that says, yeah, that person's self-employed and made this amount of money.
And I think that's typically, they want 2 years of pay stubs, and so the pay stubs come when you're considering yourself an employee, you're putting yourself on W-2 income, on payroll, which may or may not happen at the end of the year as the culmination of all of your earnings. But I ran into something similar because my law firm is an LLC taxed as an S corp, and when I wanted to buy a house, it was 2 years of pay stubs because they know, you know, 1099 is,
Compensation.
which the IRS has yet to identify.
Because you wrote off too much.
Probably.
I will say for that process with the mortgage guys, typically in my experience, the S corp is better than a Schedule C. The S corp has, I mean, there's reasons they don't get audited. They just have more validity with everybody. It's a corporation. It has a separate tax return. It kicks out a K-1, which is the equivalent sort of a 1099 or a W-2. Schedule Cs are notoriously abused, which is why they get audited all the time. People lie on Schedule Cs. I mean, people come in my office and I look at numbers and go, who did this? There's just big lies on them, and so people don't trust them is the problem.
So can I answer that from a lending perspective? We would look at your self-employed income, whether you're Schedule C or S corp, that net amount. So whether you netted $100,000 as a sole proprietor, or you netted $100,000 in some combination of distribution, W-2 through the S corp, that's what we would look at from a fully qualified traditional type financing as a self-employed borrower, at a minimum of 2 years of employment. Does that make sense?
So is it at a minimum of however that income came in?
Yeah.
Regardless of whether it's Schedule C or 1099?
Correct.
Got it.
Yeah, I would take somebody who's now today, maybe they're just 1099, Schedule C, right, that sole proprietor, and knowing that the last 2 years they paid themselves, but now they're going to go and incorporate and do what they want to do. We would look at what that filing would be, whether it's a year or 2 years, and take the 2 year average of those two as though it were filing the same today.
There's a program for that.
Here's a question. Like to jump on Sherry's question, so for the average agent between $50,000 and $100,000 income, by incorporating, what type of tax savings should they expect, or like what type of reduction of tax liability?
So for 100 grand, the self-employment tax on 100 grand would normally be $15,200. So if we did an S corp and we split that 100 grand into two, you're essentially going to save $7,600. But you're going to have the cost of an S corp tax return plus running all the payroll stuff, W2, W3, or all that stuff. So you're probably going to save $6,000 if it's 100 grand. If it was 50 grand, you're probably going to save $3 grand. I mean, it kind of scales. Like that.
And that's why there's that tipping point, because the expenses associated with electing to be taxed as a subchapter S corporation are then offset by the tax savings that you realize by doing so.
Right.
I have a question for you on home office stuff. What can you write off?
Everything.
No, legit, like what can you,
So the home office, there's two ways to do a home office. The
like
first,
maximize for real estate agents, like the, you know,
okay.
all of it.
Okay, so to not maximize it, you can just take a safe harbor. It's $5 a square foot for how many square feet you use in your house for your home office. That's an IRS safe harbor. Okay, so that's easy if somebody just wants
$5
to.
a square foot?
$5 a square foot. If you want to maximize it, it's really any expense related to your house, repairs, pool maintenance, landscaping, water, utilities. Your mortgage interest, your real estate taxes. Now keep in mind, if you itemize and you end up using 20% of your mortgage interest on a home office deduction, you don't get that in your itemized deductions. They take that away. You still get 80% over there. You can actually even take depreciation on the house as related to that square footage. I do not recommend doing that. I don't do it for anybody because, you know, you sell your house, you guys know, the tax rules are extremely favorable for people to do that. And if you sell it and you've taken depreciation on it related to a home office, now all of a sudden you got to pay taxes on that piece because you took a deduction. So I just don't do it. I just feel like it's not worth it. But yeah, any expenses related to the home, HOAs, all that stuff, you can add it all in. But keep in mind, if you have a 2,000 square foot house and you're using 200 square feet of it for home office, so that's 10%, you get 10% as the deduction, you don't get 100. So we just do a sheet. I mean, there's a form that goes with it. We do a sheet for that and add it all up.
So when you're saying $5 a square foot, you mean of the actual space that you use as
Exactly.
an office?
So if you're using 200 square feet, you
Out
get
of your
$5
2,000.
times 200.
Gotcha.
Yeah.
But your bigger desks is what I'm hearing.
Yeah.
2 spare bedrooms, not one.
If you're, how can you write off a home office when you're paying rent?
But you can still do it. I mean, people work from home and they work from an office all the time. I mean, the IRS rule says is for the exclusive, the home portion that you're using is the exclusive use of your trade or business. Well, how many people do that? Like none of you. I know that. You raised your hand, you're a liar. Because nobody does it. Everybody walks in my office is like, oh, I use, half my house for my office. That's probably not going to fly. I'd be like, let's ease off on that. Let's maybe go 25%.
Now, we pay for basically our office here. Does that mean that's something that we can write off as well?
Yeah, so that's rent or office expense. Yeah, so absolutely you can.
All right.
Without a doubt.
Restrictions on the entrance and exit, so does it have to be guarded, like commercial work, et cetera, if it's into the home, or does it have
No, it could literally be a tent in your backyard. There's no restrictions at all. As long as it's used for home office, it's fine.
So bigger tent. The REI, not like.
Oh, got it.
Translating for Vonda.
Yeah, the only rule is exclusive use. That's the only rule.
So
She's going on a little sleep.
What do
She's
you
on
charge
Amazon right now.
for, to do an LLC? What do you typically charge to set an LLC?
So we charge a flat fee of $1,500, which includes all of your filing fees, an EIN, and a corporate book. We do typically refer to the CPA to make that decision as to whether it makes sense to make that election. The first company I started, so the IRS tells you that you have to make that election if you decide that you want your LLC to be taxed as an S corp within 75 days of formation of the entity, which is what I always tell people. Because even though every CPA I know has said the exact same thing Kelly has, that you can can make that election retroactively at the end of the year. When I had my first company, the IRS was not allowing it. And either I had an incompetent CPA at the time, or I just got bad juju with the IRS, but I fought them for like 2 or 3 years trying to unwind it, and it was a nightmare. So I'm always like, 75 days. Or you talk to a CPA who's confident they can do it. And then keep in mind, so if you're operating as a sole proprietor, you have licenses and things like that. So think of everything that you stepped into is to establish your business as a sole proprietor. You sort of have to back out of and re-step into as an LLC. So if you have an insurance policy, you need to change that. If you've got, any sort of business licenses, I know you guys are exempt from the Department of Taxation, but any sort of those things that you have, you want you apply for something, the applicant now is the LLC, not you individually.
So we have state and city business licenses besides
Right.
our real estate license.
So with the
all three of
state,
those.
yeah, and with the state, unfortunately, there's not a way to change from a sole proprietor to an LLC. You just basically form an LLC, and you can cancel your sole proprietor business license. With the city of Las Vegas or Clark County or whatever jurisdiction you're in, they typically have a change of ownership form. So you're changing your ownership from you as an individual to the LLC being the owner, if that's helpful. Anybody else? Yes.
How do miles equate to as a monetary write-off? So is it $10,000, $7,000, 10,000 miles, is it $7,000 credit? How does that work? I'm just
Okay.
kidding.
Vehicles are a big deduction for you guys. It's usually the biggest one that we can get. We have 2 ways of treating a auto. We can take actual expenses on an auto, or we can take a mileage deduction. More often than not, we take a mileage deduction with you guys because you drive a zillion miles. But if we were going to take the actual, I'll explain both just so you kind of know. If we were going to take the actual, it kind of depends a little on the car. If you lease a car, we can deduct the lease payments, car wash, gas, every expense really related to that auto. We can take that, and then we essentially take a percentage of it because that's considered listed property, so you probably have some personal use. So we still need your mileage so we can figure out what the percentage of personal use versus business use is, and then we take that percentage. If it's a leased auto, we just deduct the lease payments. If it's a purchased auto, we deduct the depreciation on the car, which we calculate. If it's a heavy vehicle, over 6,000 pounds, we can take a lot of depreciation. If it's under 6,000 pounds, it's very little. It's kind of pathetic. It's considered a luxury auto, which I don't know why they put the word luxury in it because it has nothing to do with it. It's all about weight. More often than not, though, we just take a mileage deduction because you guys, most of the realtors that walk in my office drive 20,000 miles a year. The mileage last year was 53.5 cents a mile. I'm not sure what it is for 2019, but it's right in the ballpark. It doesn't really change much. They'll change it half a cent here and there. So 10,000 miles would be a $5,300 deduction. So it just depends just however many miles you drive your business. Commuting to and from the office does not count. It's only everything else that you do business related. But that could be going to Target to pick up office supplies or a client gift or things like that too. It doesn't have to just be visiting houses or things like that. But the only thing I always say is commuting doesn't count. To and from work isn't a part of it.
What are some of the easiest ways to track your mileage that's not one of those godforsaken logbooks that you put under your visor and forget about until December?
I will say we have gone through audits with mileage logs, and it's man, it depends on the agent you get. Some of these people are ridiculous, and some of them are pretty reasonable. Number one, I recommend you get your oil changed at the same place all the time. Because I'm not kidding you. One of the audit items that they'll ask for is the oil change receipts. Because like if you go to Terrible's, it will list all the times you got your oil changed, and it will list the mileage on the car each time you got the oil change. So if you're under audit, that's an easy way to prove you really drove the car 20,000 miles because you got a lot of oil changes. And it's right there on it. The easiest way I would say to track the miles is an app. One of the most popular ones is called Mile IQ. Every trip you take, you swipe left for, whether it's personal and right for business or vice versa. I forget how it works. But the app, I want to say it's $5 a
Those of
month.
you who are
If you're on
familiar with
Tinder,
Tinder
you know
will
what I'm talking
understand.
about. I know where you were going. Yeah, so you just swipe for the things. You just have to keep up with it because it's tracking every single trip you make, every trip, everywhere you go. You can do a log too. A log is fine. You know, coming into my office and saying, well, I drove about 15,000 miles and about 12 was business, I'll throw that on your tax return, but if you get on to, we're going to figure out how to defend that. You know, I'm not going to cheat you out of your mileage deduction, but at the same time, you know, that's a loosey-goose number, and an IRS agent's going to pick on it pretty fast.
I had a CPA once, not you, obviously, but a CPA once telling me to recreate the mileage log, but use one of those ballpoint pens that has the 4 different colors on it. So each time you wrote a day, change the color so it looked like you were actually tracking it as you were doing it. Yeah, one for the Sicilians.
Right. Keep a calendar. Calendars are helpful too, honestly. If you have a calendar that shows all of your different appointments, because even if you didn't do your log very well, you have a calendar and we can sort of prove that, you know, hey, this person's going here and then there and then there in a given month. You know, sometimes we can use a sample size to prove our point and get a reasonable agent to agree to that.
What would be nice is if an app could extrapolate from the calendar with the addresses.
Call Google, I don't know.
Call Google. Anybody else?
What is the average cost for the CPA for a realtor?
I don't know what other people charge, but for me, I charge, for the S election, it's a flat fee of $200. For an S Corp tax return, we have minimum fees. So it's $650 is the minimum fee for a business tax return, whether it's a partnership or an S Corp. We charge minimums and then we track our hours, and we may charge you more. It sort of depends because, you know, there's some people in this room that are going to bring me a really super neat, nice folder with numbers already prepared, and there's a few of you that are going to bring me a shoebox full of crap. So I can't do flat fees like Gina does.
Well, talk about that. So how do you make yourself, describe like your favorite client, how they come to you with information, how they track their own information. Can you set people up in QuickBooks? Is that overkill?
Yeah, for you guys, I mean, QuickBooks Online is not my favorite software at all in any respect. But for people that are sole realtor type jobs, QuickBooks Online is actually really good. So that's definitely a way to go, but that's a monthly fee because that's a subscription cost to do that. But you can literally do it on your phone. You can scan your invoices. I mean, I always recommend, like, take pictures of your receipts because they fade over time, especially from a restaurant, places like that. You know, there's also an app I use on my phone. I forget what it's called. I'll tell you because it's super helpful, honestly, because I do all my receipts with this app. It's called TurboScan. And you can take a picture of your receipts, and then you have them forever, and they're categorized into a month. You can email them to yourself as a PDF. You can put them in a folder. There's a whole bunch of stuff you can do with them. But I recommend you take pictures of your receipts because you'll get audited 3 years from now, and that stuff's faded. And that's just how the IRS works. They'll audit you tomorrow after you file. It's always 3 years later, right before the statute ends. So I would say that. As far as the other thing you can do record keeping wise, you know, you guys typically don't have tons and tons and tons of transactions. My office is perfectly okay if you just give us 12 bank statements and we'll create a P&L and a balance sheet for you. It costs a little extra to do that, but it's not a lot, honestly, because bank statements are super clean and easy. If you have a credit card that you use for business, same thing. I recommend that you keep one credit card that's strictly business. And if you give us statements for credit cards and bank statements, you know, we can typically put that together very quickly.
For you, Gina, on the LLCs, do you have to, every year, I know you have to file, right, to your, whatever it is, you do it for me, so.
Annual list.
That thing. When you do that, are you supposed to do like do minutes, meeting minutes or anything like that, or?
Ideally,
so
yes.
To maintain the LLC, what's the best way to make sure you don't screw that up?
Yeah, so you will, so whoever your registered agent is, so as soon as you form an LLC, you have to name a registered agent, which all a registered agent is a physical place at which a human being can accept service of process, which means a lawsuit, at what approaches normal business hours. So you can act as your own for free. There are services that offer it. We offer it for $250 a year. We only charge for it because the state is starting to get really lazy and starting to send a lot of the notifications that should go to the business owners to the registered agent, and then it's on us to go find people. So you have to file your annual list every year, so your registered agent will get notice of that 3 months prior to your annual list being due. And then ideally you're doing an annual set of minutes. Now it's hard to make a compelling argument for a single member LLC to sit at a kitchen table and have a meeting with themselves essentially and talk about the decisions they made during the year. But it's one of those things, so from Kelly's perspective, at least my understanding, so I'm going to totally step into the tax world, which he's going to smack me on the nose in the newspaper and I totally get it. So some of the things that would otherwise, so anything that would be easily construed as a personal expense should not be paid out of your business. So arguably things like vehicle expenses, cell phone bills, even though you're using them in your business, they're still also personal expenses. So some CPAs that are super like OCD about this will have you create annual minutes or create a resolution that says, I'm going to deploy this vehicle in, for business use. So it's sort of like a blessing on making that decision, something that would otherwise be a personal expense being paid out of business funds. So that you're not having to like make that distribution to yourself and then pay that out of your personal expenses. So I don't know how you feel about that, how you've been through audits, I have not, how important that is to like ratify those decisions.
The IRS never asks. Honestly, they don't ask. They look at it and go, okay, what are the expenses that you're deducting, and then they try to decide whether they're personal or business expenses. They take a cell phone, for instance. I mean, I would say, pay for your cell phone or your business. I don't care who it is. They're never going to ask. I give them the invoice, they still don't ask. I just don't think they're that sophisticated, and they want to fight, but they don't want to fight about that. So same thing with the car. I prefer, and I'm sure Gina does, that if you have a car and you're deducted for business, that you put it in the business's name and you pay insurance through the business and all that kind of stuff. I know I have a lot of people that don't want to do that because a commercial policy tends to be more expensive than a personal policy. So I have people that don't. Now, I don't know how that works from a lawsuit standpoint, how that's going to hurt you, but from a tax perspective, they just don't ask. So
what are some of the things they do zero in on in those audits? If
So
you're going to keep your nose clean about anything, what is it?
So expenses are, the way the code defines expenses for any business is that you can have any expense for the business that's considered ordinary and necessary. Those are words straight from the code of the IRS. So you sort of have to decide what's ordinary and necessary on your own, but the IRS may have a different idea about what that definition means, especially the necessary part. So everything needs to have some arguable business purpose. Meals, I mean, I'll have realtors that have a zillion meals. Well, that's where the calendar comes in. Who'd you go to lunch with? And why is that person somebody who could either was a client, is a client, could be a client, could refer you a client? Almost everybody falls in that category, unless all of a sudden we find out that meal was with your wife and kids. Your husband and kids. Then that doesn't work anymore. And so you just, I tell people all the time, like, don't be a pig about it. Take the ones that legitimately can help you and put them on your business card. But the other stuff, don't. Travel's a big one too. They hone in big time. I got, people that'll say, yeah, I went to Croatia, and it was a great trip, and I deducted on my business. Well, what business did you have in Croatia? Or Italy, or, and then if IRS, if your Facebook's unhidden, and they start looking at your photos that you upload, and it's just you and your family and your in-laws or something, it just isn't going to fly. They have ways of asking and checking on these things. They're not idiots. Some of them are, but they're not. So you just have to be cognizant about the fact that these things can get audited. And once they get audited, that's when people are like having that like, oh crap moment, like, should I have deducted that? Well, if you're gonna have one of those moments, maybe you probably shouldn't.
So totally asking for a friend. I know somebody who like went to Alaska for like a week and a half, and then but taught a class at an office there, right? That was related to real estate. Totally right off, like for the whole trip.
A piece. So I mean, thing is if you go somewhere for 7 days and you have 1 day of business.
You know this is being broadcast somewhere, right?
I took my laptop. I mean, this person took their laptop.
Then there's a thing that the IRS would use, there's a term that they would use, and they would say, what sort of element of personal pleasure did that trip provide for you?
Well, I love teaching. This person loves
And,
teaching.
So I mean, like the Trump rules. I mean, you guys probably all know that meals and entertainment are meals are 50% deductible. Entertainment is now 0. There's no deduction for entertainment. It used to be 50%. It's an element of personal
and booze
pleasure.
is considered entertainment, not
What's
meals.
that?
And booze is considered entertainment, not meals.
So a trip to Hawaii or Alaska or wherever, I mean that's travel, and travel is deductible. But there's specific rules about if you go somewhere for business, but then you saddle that with some sort of vacation. And you can deduct a part of it, for sure, but there's another part of it that you probably should exclude. And you probably ought to do it, even if you're sort of greedy about it. Maybe you say, well, I'm going to deduct half the trip, even though it was 1 day out of 10. At least you're excluding something. And that does lend a little bit of credibility to your story when you go in front of an agent. It's when people deduct the whole thing that there's no credibility anymore, and then they're skeptical. This is what happens. Is then they're skeptical about everything that's on that return. That's where we end up with an audit that could have taken 10 minutes that takes 10 weeks.
And you said something about Facebook, so they're checking.
Oh, they'll search your social media. There's no rules against looking at that stuff for them. So they'll try to find out like who you are and what you do, and yeah, they will.
Replace the pictures of that person teaching.
With every.
Replace the ones of the fishing with the teaching.
Right.
Some agents are very reasonable, and I tell you, some are very unreasonable. So it's part of it's a lottery system. Like, who do you get?
What about client appreciation trips? How does that work? As in, speaking for a friend.
Take a client on a trip?
Tip their client to a trip, but this person they took gave them 9 clients for the year, even though they were related to them by marriage.
Is that on Facebook?
Each little sentence fragment made that plot thicker and thicker.
This is your life too. Everything gets more complicated as it's explained more. I mean, it might fly. I mean, the IRS would probably say it's personal pleasure because maybe there's a relationship there. They might say it's a gift, which you can only give a gift up to $25 to one person per year. I mean, gifts the rules on that are just stupid, but they could say it's a gift.
$25?
$25 a year per donor, whatever that works, per person.
I thought it was like 10 G's.
No, that's a different kind of gift, business gift.
Oh.
Well, I would classify, if you were taking a trip, I would classify it as travel if it was a client you were taking.
Got it.
And I would me as a CPA, I would take that deduction all day long. Hey, we'll take our chances. How they get, they gotta dig to find out that there's a relationship and all that stuff.
Same last name.
So.
How rare is the last name? Is it like Bongiovi? Or is it like...
You're a terrible client.
She's the shoebox full of receipts client, right?
So if I paid to form the LLC and then I paid for the new business licenses in the LLC name and I also paid the yearly fee for the registered agent service, are those expenses that I can write off?
Totally. They're all business expenses. All right, I think we have one last question, is that okay?
So let's just say I S corp and then next year I'm gonna start paying myself a salary, but let's say halfway through the year things are going really good or really bad. What is should I err on the side of conservative? What should I pay myself salary wise for next year? With our industry, we don't always know.
Right.
So if I wasn't gonna do it all at the end and figure it out,
I mean, personally, I'd be conservative about it.
okay.
And then if things started going really good, I would still stick with the same number.
Okay.
And then, because you could always, if you run a payroll, especially through a payroll service, you can always get to December and pay yourself a bonus.
Okay.
So to me,
That would be tax different,
no, bonuses are not taxed. That's a misnomer. The tables change because all of a sudden the tables think that you make that every week. So it takes a bunch more taxes out, but you'll get that money back when you file your tax return.
Your rough estimate is 50%-ish, but if I wanted to be conservative, not knowing what next year would be, and I wanted to do 40%.
Right, then I would say that would be good, and I would just try to do that all year. If things started going bad, I would stop paying myself a wage,
Okay.
or decrease it, and So if it goes up, I wouldn't change anything. If it goes down, no, I would change things.
Okay.
Yeah, so that you're not paying too much payroll tax. Yeah.
Wow. Great information. Thank you so much, Gina. That was awesome. Thank you.